The crypto winter just got colder and darker. Crypto giant FTX and its affiliated companies have started the process of filing for Chapter 11 bankruptcy. Founder Sam Bankman-Fried stepping down as CEO, and much of the crypto space has been dragged down into this icy chill. The CEO of Binance, CZ, warning that more crypto companies will fail in the coming weeks in what he calls a cascading crisis. All right, joining me to make sense of all of this and break it down is Ron Neuner, co-founder and host of Crypto Banter. Ron, welcome back to Kitco.
Wow, I wish I was back here under better conditions because, by nature, I like to be a positive person, but I guess this is really the eye of the storm. You've caught me in the eye of the storm.
Well, we have you to navigate us through the storm, to at least explain to our viewers what the elements are that led us here. And maybe there is a positive upside to all of this. Let's see. But let's take it from the top. And we know that Sam Bankman-Fried, SBF as he's known, the CEO of FTX, the so-called golden boy of crypto, if you will, filed for Chapter 11 bankruptcy. Earlier this week, he was tweeting, "I'm sorry, I effed up." Well, no doubt about that. But what exactly happened? How did he F up FTX?
So let's look at the facts, or when I say the facts, given the information that we've got, let's try and see what's happened that led him to say that I'm sorry. So as you know, SBF was very young. He built this crypto empire in his 20s. I think he's still around 29 years old. And he built this huge crypto empire worth billions and billions of dollars. He donated millions of dollars to the Democrats and political parties in the run-up to this election and the previous election. He sponsored sports stadiums. He invested in multiple funds. He sponsored sports teams. And he did this all in the span of 3-4 years. This was a 20-something-year-old kid who was sleeping under his desk at the office and managed to amass a wealth and build up this empire, which was valued at, I think, at its peak, somewhere around $90 billion or something along those lines, depending on how you calculate the raise. And I guess as an industry, we probably should have been asking a lot more questions as to what happened. So let's talk about what's emerged since this whole thing happened and how it all unwound.
Yes, the great unraveling.
The great unraveling, exactly. It started off with an article from a publication called CoinDesk. And in the article from CoinDesk was a balance sheet, or a version of the balance sheet of Alameda Research. And Alameda Research was the company that Sam owned before FTX. It was a market-making and investment and research company. And SBF used that as his vehicle to make the investments in FTX. It was almost like known as the holding company of FTX, so to speak. And in this balance sheet leak that Alameda Research, that CoinDesk did around Alameda Research's balance sheet, people started to notice that a few things. The first thing I started to notice is that Alameda Research had a whole lot of FTT tokens on their balance sheet, which is the token of the native token of the FTX exchange. The second thing is that people realized that the liabilities, or the assets that were on this balance sheet were actually very small, illiquid assets. And what they realized was that if you take the assets less the liabilities at a true value, you would actually you'd have Alameda bankrupt. And this started to do the rounds on Twitter. And after a few days, you know how things go on Twitter, they get worse and worse, and there's more and more noise. And as much as we hate that noise, it's actually proven to be right more times than it's proven to be wrong. It happened before all the other collapses. Right. And then the blow came out, and the big blow was when CZ, the founder of Binance Exchange, who was the first investor in FTX and who exited his position in FTX over a year ago, tweeted, and he said, as part of Binance's exit from FTX last year, Binance received roughly $2.1 billion in cash, BUSD, and FTT. Due to recent revelations that have come to light, we decided to liquidate any remaining FTT on our books. We will try and do so in a way that minimizes market impact. Due to market conditions and limited liquidity, we expect this to take a few months to complete. Binance always encourages collaboration between industry players. Regarding any speculation as to whether this is a move against a competitor, it's not. Our industry is in its nascency, and every time a project publicly fails, it hurts every user and every platform. We typically hold tokens for long, and we held this token for this long. We stay transparent with our actions. And at the time, what people suspected was that this may have been a move by Binance to weaken its competitor. In light of the weak balance sheet that was published, what if all of a sudden your biggest competitor started to sell the asset on the balance sheet?
Yeah.
And that's when everything started to unwind, because the price of FTT crashed. The CEO of Alameda Research, a lady called Caroline, then tweeted and said to CZ, she said, "We will buy all the FTT tokens that you have for $22. The price was above $22 when this happened. And so that was another fundamental mistake, because what she highlighted a certain price point, and that price point was $22, which was a random number. It was a random price point. When people started to dig further, what they realized was that $22 price point was the price point at which the assets and liabilities of the balance sheet remained solvent. And because they had used this FTT token as collateral to fund a whole lot of their deals, as leverage to fund a whole lot of their deals, if the price went under $22, then they would effectively be insolvent. And so since that tweet, for a few days, FTX and Alameda were aggressively defending the price point of $22. There was a whole lot of selling of FTX token at $22 until eventually the price wall broke and everything started to unwind. And that brings us to where we are today, where eventually FTX Bahamas, which is the FTX International, which is the entity that services a majority of the international operations, excluding places like Japan and USA, which are highly regulated, declared or was declared bankrupt by the regulators there, and a liquidator was appointed.
All right,
24 hours.
Yeah,
24 hours later, the US entity goes into Chapter 11.
Yeah, that was a very quick turnaround, and who knows, by the time this interview comes out, there could be more developments, but let's go with it anyway, Ron. It's interesting because there was some speculation that given the long-standing rivalry between CZ and SBF, that this may have been some revenge plot, as you mentioned, for CZ to bring down his longtime competitor. But because essentially it was that tweet that questioned the value of FTT that started the bank run, that started the cascade of people wanting to pull their tokens out of FTX to get their money back. Wasn't that the domino that really sort of created the mass panic?
So that was the domino that created the mass panic, but I think that was just the last stone that broke the glass house kind of thing. It was the last stone that hit and broke the glass house. Now, at the time when I reported on it, I thought that CZ played a master stroke of a master move. I mean, find out that your biggest competitor is weak, move your chess pieces around, make an announcement, and then as they're about to crumble, go out there and try and either eliminate them from the market or buy them for a very, very, very cheap price. And as you know, what unfolded later in the week was that when this whole thing crumbled, and Sam Bankman-Fried went silent for almost a day at this time when everything was crumbling. And then both him and CZ came out with an announcement that Binance had reached an agreement to buy 100% of FTX International.
Yeah.
Subject to due diligence, non-binding LOI, subject to due diligence, and with the ability for Binance to exit at any time, and for FTX, the inability to talk to any other parties while this was going on. Binance then conducted a due diligence, and less than 24 hours later, they published an announcement. Both parties published an announcement saying that Binance actually wasn't going to buy this entity, and they cited that there was just too many irregularities with consumers' funds. And so what seems to have happened was the following. It seems that Alameda Research was taking bets on the crypto industry, highly leveraged bets. And when they were using the FTT token as collateral for these highly leveraged bets. So remember, Alameda has a whole lot of these FTT tokens, which is the exchange token for FTX.
Right.
They put it onto FTX and borrow US dollars against it. So now FTX, the exchange, has these FTT tokens, and Alameda has a whole lot of money that they've borrowed against it, which is consumer funds from the exchange. And then when the price of FTT collapsed, well, the collateral was worth nothing, and it emerged that Alameda Research had lost anywhere between $10 and $14 billion on all these bets that they'd taken on the industry. And then there was a $10 to $14 billion hole in the balance sheet of FTX and Alameda. And unfortunately, it seems that that hole is customer funds.
So FTX was essentially using client customer funds to fund the trading of sister company Alameda Research. Would
Yes.
that be a simple way of saying that? People were putting their money into the exchange, FTX, and in one way or another, those coins, that money was used to cover the trading strategy of Alameda Research, which clearly didn't work out at some point.
Correct.
All right. So
highly leveraged trading strategy that never worked out. Yes.
Okay. So what happens to the people that had coins and funds on the FTX exchange?
This is a very sad story, and this is a huge concern for me. So I tweeted on 3 days or 2 days before this happened. I tweeted and I said, get your money off FTX. This is financial advice. That tweet is available for everyone to see on my Twitter profile at CryptoManRun. When I did that, multiple people in the industry threatened me with legal suits. People on the inside threatened me with legal suits, saying that I'm causing FUD, fear, uncertainty, and doubt about the exchange. That tweet got huge traction. I think it got close to 20,000 likes and retweets and whatever else, millions and millions and millions of impressions. And I stood my ground because the information that I had at the time showed me that this exchange was probably insolvent. Some people managed to withdraw their money, but eventually they got to a point where they couldn't fund the withdrawals anymore. And that's where the point where Sam Bankman-Fried put up his hand and said, look, I'm sorry. And what I'm going to try and do is I'm going to try and do right by the users first. And after I've done right by the users, I'm going to move on to investors. But at that point, unfortunately, all the withdrawals had stopped because the exchange simply didn't have the assets or the liquidity to meet the user demands. And so unfortunately, since that point, withdrawals have been stopped, barring a few things which happened along the way. One, certain addresses which were KYC'd in the Bahamas, where FTX International was based, were actually allowed to withdraw for a certain period of time. And speculation is that those were employees or people that were KYC'd in the Bahamas, and they were actually allowed to continue withdrawing, and they did, even as short ago as 24 to 48 hours ago. This was happening. Multiple funds, users, etc., left money, unfortunately, and lost money, left money on the FTX exchange. And where we are now is that, unfortunately, we've gone into Chapter 11, and they've been declared bankrupt in the Bahamas, which is very scary. And the reason I say it's very scary is if you recall the famous Mt. Gox incident, where there was an exchange with a whole lot of Bitcoin that went insolvent. And that was 8 years ago. It was in 2014. It was 8 years ago that exchange went insolvent. And only now are the liquidators in Japan starting to file the right paperwork for people to start getting some of their money back 8 years later. And I don't expect that this is going to take as long as that did. But I do think that, unfortunately, now users who had money locked up in FTX are going to have to wait many years to get fractions on their money back. And it seems that the liquidator that has been appointed in the United States is actually the same liquidator that worked on the Enron case. So, you've got I think they call him a pit bull or a bulldog of a liquidator. I'm just trying to find it for us over here. He's been called a pit bull or a bulldog of a liquidator, and he's put in charge of actually resolving this and digging up. His name is John J. Ray III. He's the lawyer that's been brought up to clean up on Enron, which is, I think, pretty appropriate. And so, unfortunately, I think that users who have funds on FTX will see a fraction of their money back, and they'll probably only see it in a very long period of time. And it's very sad. It's not only retail users that had money on the exchange.
Yeah.
The effects of this are going to unwind over the next couple of months in crypto. And so I think that you mentioned when we started this interview that this is a cold winter. I fear that this winter is going to get a whole lot colder. And I'll tell you why. Let's look at all the different affected parties by this. So the first affected party is the investors in FTX, big venture capital funds, a whole host of celebrities, including Mr. Wonderful, Tom Brady, Sequoia. The biggest and most prestigious funds in the world were investors in FTX because FTX, this blue-eyed boy of crypto, couldn't do anything wrong. That's one of them. And, investors, well, okay, some of them are big high net worth investors, others are smaller investors, and unfortunately they get hurt. But that you kind of know when you're investing in something, you're taking a risk. The second bucket of people that are affected is the users on FTX. Innocent users on FTX who put their money onto an exchange that went by the slogan of the safest and easiest place to buy crypto, or the most regulated place to buy crypto, something along those lines. Their money is now gone and they can't get their money out. And I really wish I could have helped more people. I tried my best to help more people get money out of there. That's the second part. And remember that is the money that was fueling our industry, that was being reinvested in our industry.
Yeah. Well, I mean, obviously the ramifications of this are very, very widespread. The contagion is massive, not just to the investors, to the users, to the crypto space as a whole, to cryptocurrencies, which we've seen tank, such widespread reverberations and the aftershock of all of this, really a tsunami here, which I do want to break down into further detail. But first, why don't we explain a question that Dave Portnoy actually asked is what happens to the money that is stuck on the FTX exchange in terms of the coins? Like, did Dave Portnoy tweeting, if I bought Bitcoins through FTX and FTX goes at belly up, where do they go? Does anybody have access to them? Are they just lost in the ether or something forever? So where do these Bitcoins go? And what does it mean if they're taken out of circulation for a while?
A lot of those Bitcoins we know specifically around Bitcoin and Ethereum that it's gone. And the reason why it's gone is because remember that Dave Portnoy and others put their money on FTX. FTX gave that money to Alameda. Alameda invested and lost that money.
But doesn't that mean that somebody else has those Bitcoins? That whoever they used to pay off for the bad trades then has those Bitcoins? They're not like...
They invested in multiple projects. And that brings me to the third bucket of people that are affected by this, is the hundreds of projects that FTX and Alameda invested in, which you now have this bankrupt entity as your shareholder, which owns huge portions of your tokens. Like, let's think about a token like Solana, where FTX own a huge share of the tokens in circulation.
Yeah.
And now that's probably in the hands of the liquidators. The fourth bucket of people that are really, really, really affected by this is projects that raised money but kept their money on FTX. So think if you were a crypto project, you raised a whole lot of money, maybe sometimes from FTX, maybe sometimes from others, and you left your money on the exchange, and now your runway to build this amazing project that you've got all these people working on is locked up on the exchange, and you have to close down your project. And we're hearing of huge projects in the industry, new projects, old projects that raised a whole lot of money, which was sitting on FTX because everyone trusted Sam. So this contagion is, I mean, we're in the eye of the storm, but the effects and the after effects of the storm are going to be cleaned up for a long time. And, it's upsetting for people like us because we work really hard to build amazing things and to educate people and because we believe in decentralization and the promise of what Bitcoin can do. And then someone like Sam comes along and destroys years of progress that we've made, has been destroyed. And when I say destroyed, how long will it take us to bring new money into this industry? How long will it take us to bring all that money into this industry so people can trust this industry again? It's going to take us a long time. How long is it? How much regulation is this industry, excessive regulation, is this industry now going to face? So, I mean, it's a huge catastrophe, and I expect the cleanup operations from this storm to last a long time.
Again, I want to go back to the whole idea of what this means ideologically for Bitcoin and the crypto sector and the crypto industry at large. But I just want to focus a little bit more on the immediate pieces that could fall here, because we have had people wondering, well, which exchange is safe? Because people weren't aware, correct me if I'm wrong, that FTX was lending out their tokens, their coins to fund these bets by Alameda, to fund those leveraged trades. So people are now wondering which exchange is safe. And instead of wondering, a lot of people are pulling money off those exchanges. So break that down for us. What's happening with the Coinbases of the world, for example?
We want to think that regulated exchanges in domiciles or in jurisdictions that have very strong regulators are safe. But I want to remind you that even FTX in the United States, with all the regulators and all the licensing, has declared Chapter 11 bankruptcy. And so I think we need to go back a few steps and say, the reason why blockchain exists is because of decentralization, because we want to disintermediate centralized entities and control our money ourselves. And so one of the things that we always say in the industry is we say, not your keys, not your coin, not your private keys, not your coins. And we always discourage people from leaving money on exchanges. We always say, if you want to trade on exchanges, put your money on, do your trade, and take your money out and leave the exchange. Because if you look at all the failures, not all, but a lot of the failures that we've had in this space recently, we've had a cascade of failures. Celsius, Voyager, BlockFi, Three Arrows Capital, FTX, all of those are centralized entities. The decentralized technology, the technology that's built, the Bitcoin and Ethereum, that continues to work as planned. Bitcoin continues to mine blocks and to work uninterrupted. Ethereum continues to run blocks and to work uninterrupted. Decentralized finance, DeFi, without any centralized custodians, continues to work uninterrupted. And so I think we need to break this industry up into two parts. The one part is the ideological part, and the part that brought us all here, the part that brought us all into Bitcoin and Ethereum. And that is people who believe in decentralization, in not trusting centralized entities, and in people who don't want to be affected by irresponsible government printing of money and government interventions. That's why this technology was built. But in this industry, you have centralized players. And the centralized players seem to have systematic failure because of greed, because of over leverage, because of stuff like that. And so in terms of the conviction for the technology, this is a massive setback for the industry, but it just shows more and more why this technology is required. Because what we want to do is we want to remove centralized players and start trading on decentralized peer-to-peer players that are governed by smart contracts and not human intervention.
Well, Ron, 100% agreed, and it's a point I've long been making, that do we really want to bring in all of this traditional finance into what's supposed to be an anti-traditional finance? I mean, Bitcoin was invented because Satoshi saw how broken our current financial system is, but the crypto industry as a whole seems to have forgotten this and is moving closer to what Satoshi was trying to move away from, replicating that broken financial system through exchanges, through banks, through products that are spun off from the original coin that create yields, through derivatives, through this need to have the ETF and futures. I mean, all of this serves to change the purity of Bitcoin and the Bitcoin mission. It contaminates the essential purity of what is supposed to be the people's currency away from all of this traditional financial system that we've seen has been corrupt through various players through time. So should the industry be reconsidering this as a whole, this need to bring in institutional investors, which we've been celebrating at some point, this need to have derivatives and ETFs and futures and spun-off products? I mean, should we just go back to a pure form where it's about Bitcoin?
So I think we're mixing up two things here. We want to bring in institutional money. We want to build an infrastructure where there is a derivatives and an options and a futures infrastructure, because in every market in the world, the derivatives and the options markets are way bigger than the underlying market. We want to bring in institutional money, but we want institutional money to invest in the decentralized portions of this industry, institutional money should buy Bitcoin because they want to hedge themselves against inflation, or they want to hedge themselves against centralized money and collapses of economies. One of the biggest issues now with the dollar getting so strong and interest rates getting so high and all the US dollar denominated debt around the world is the collapse or the potential collapse of currencies, countries, and economies. Now, when that happens, you want to have somewhere to run to. Traditionally, investors ran to gold and silver. You could also run to property. But now there's another option. And that other option is Bitcoin, and maybe you could even argue Ethereum. So we've provided investors with another option. The problem is that this option, we're getting centralized entities forming around this. If I were to be critical, I'd say, what is the difference between a Lehman Brothers and an FTX and an FTX? And they're exactly the same. They're centralized entities that played too much with leverage and eventually got themselves wrecked. And so there are, in this case, there is the possibility and the option to do exactly what you wanted to do with a centralized entity, but to do it through a series of smart contracts that are decentralized and require no human intervention. And I think that's the world that we're going to move to. And the more of these centralized failures that happen, the better. I'll give you a perfect example. Earlier this year, we had the collapse of Celsius. Celsius was a lending house. For all intents and purposes, Michelle would take her Bitcoin, deposit her Bitcoin on Celsius, and she would borrow against the Bitcoin, which is left as collateral on this thing. At the same time, Rand could do the same. So Celsius was the traditional bank. One party deposits and borrows against their deposit, and so does another party. Now, you can do that all without a centralized entity. You can do it all through a set of smart contracts where I send, using my crypto wallet, I send my deposit to a smart contract, and I can withdraw against it using smart contracts with no human intervention. And that way, number one, I can see all the transactions on chain. But number two, it's governed by hard and fast rules, and there's no human interventions. And then you eliminate greed and fear. And then that makes for a much more stable, much more transparent environment. And so the problem is that we're getting all these huge centralized entities in a decentralized world, which are taking leverage. Now I want to go back to your original question. Which exchanges are safe? Right now, you don't know. You want to hope that the exchanges that are in highly regulated regions are safer than the ones that aren't. But we've realized that even that's not the case. So one, don't put your money onto an exchange if you don't absolutely need to. The second thing is ask yourself a whole lot of questions about where the exchange is getting money from. And I know hindsight is perfect and everything else, but we should have asked more questions around how this 27-year-old afforded to buy 8% of Robinhood, to brand all these sports arenas, to buy and to donate millions of dollars to the Democrat Party before the elections. We should have asked more questions. And I believe that if we had, the only answer that would have been logical is, hold on, there must be leverage in the system somewhere. Where is all this money coming from? And so, I think that there are very reputable institutions, and I'm going to cite, like Coinbase is a very reputable, highly regulated institution. And I want to say that I highly doubt that they're leveraging their customers' funds given their approach. To me, they seem pretty safe. And there are a whole lot of others around the world that where I have the same thoughts about them. But ultimately, if you want to be really safe, take control of your own money, use decentralized exchanges. That is why this industry was created.
All right. Well, Ron, you mentioned the financial crisis and you drew some comparisons there. So, of course, what we saw after 2008 was a big step up in regulation, which is, as we've touched on, probably one of the biggest reverberations to come out of all of this. We know that the SEC has already been threatening to regulate. We know that the Justice Department is now saying that they're looking into this. So how do you see it playing out from a regulatory perspective now?
I think it's highly unfortunate because of the nature of the asset. The nature of crypto assets allows people to transfer huge sums of value around the world very quickly without any kind of intervention. By nature of that, by implication, already the regulators were highly skeptical and highly wary and wanted to over-regulate crypto. I think as a result of what's happened now, we're going to expect much more regulation in crypto. And unfortunately, I think that what that's going to do is set us back a lot and actually get to a point where we stifle innovation. You and I both know that the United States, because of the lack of regulatory clarity, makes it much harder for companies, crypto companies, to start up in the United States. And as a result, what's happening is that there's an outflow of capital and intellectual capital out of the United States into jurisdictions that are less regulated, or maybe, shall we say, more friendly. And that's a big loss for the United States. I shudder to think what happens after this kind of event and how over-regulated the industry becomes. And the reason why I say that is because if you think of the world before 9/11, 2001, or before Lehman collapse, before 2008 financial crisis, there was regulation, but there wasn't a lot of regulation. And if you look at the world after those events in their respective industries, we're over-regulated. I mean, today getting credit from a bank is crazy what you have to provide. And one could argue that that's inefficient. And that is, again, where this industry wins, is that if you're using smart contracts, the code is the law. And anyone can read the code and see exactly what's happening. And you don't need the regulators to get involved. But I think, unfortunately, now what we've done is we've given them so much ammunition to regulate us that I shudder to think the type of regulations that we're going to be getting.
Right. Yeah, absolutely. And as you've mentioned, the cascade has only just begun. The SEC is investigating, the U.S. Justice Department and the CFTC are also probing FTX and reportedly also Binance. So this could just be the beginning of a massive regulatory overhaul, which is much needed, you could argue, on the one point.
Can I just bring up a point here around regulation? Very publicly, Gary Gensler came out almost uncharacteristically for the SEC and boasted about how they fined Kim Kardashian for promoting a crypto token. And I don't know how much they fined her, but a couple of $100,000. And that was a very, very, very proud moment for the SEC and for Gary Gensler. In fact, so much so that he made a video about it very uncharacteristically. And he was called out by other members of the SEC for almost gloating about it. Where was Gary Gensler when this whole thing happened? Where was Gary Gensler when Sam Bankman-Fried was spending his customers' funds? It's very strange.
You're going to have to ask Gary Gensler that, Ron. But I will now, seeing as you've kind of gone there, I will wade into some of the conspiracy theories that are out there on the Twitterverse. And again, just a conspiracy theory, but this has been floating around, this idea that SBF, his father, has links to Gary Gensler, and that the CEO of Alameda, Carolyn Ellison, also has links to Gary Gensler. And again, I will say that this is a conspiracy theory. I'm not necessarily lending it any credibility, but seeing as we've kind of waded into this topic, I'll let you weigh in on it. There is this idea that perhaps this was some massive setup to get the industry to collapse, because it's always been seen as a threat to fiat currency, particularly the dollar and its dominance. And this was the way to get this massive regulation in. I'm going to let you break down some of those theories because I think you're better equipped to do that than I am.
So you know me, I'm a man of facts and fundamentals, and you're forcing me into conspiracies. But I mean, I'll go.
Well, what is the theory? Explain the theory. I think I got the gist of it, but break it down in better detail.
There are multiple theories. Theory number one is that the different regulators in DC are pulling to become the regulators of crypto. SEC, CFTC, et cetera, all pulling for crypto to be regulated under their jurisdiction and under their powers, because that gives them more budget and more responsibility and more power. So that's the first thing. And so now the more collapses that happen, the more budget that, say, for example, a Gary Gensler could come out and say, look, we need more regulation, therefore we need more power, therefore we need to regulate that. That's one of the conspiracy theories. The other conspiracy theory is that if you look at Sam Bankman-Fried's background, Sam Bankman-Fried was lobbying for regulation, and he was lobbying for the wrong kind of regulation. He was lobbying for over-regulation. About 2 weeks before this whole thing happened, the entire crypto Twitter started to call him out, and he actually debated another big figurehead in the crypto industry called Eric Voorhees. And they debated around the need for regulation. That spiked because the crypto industry didn't like that Sam Bankman-Fried was lobbying. He was lobbying the Democrats, strongly lobbying, second biggest contributor after George Soros to the elections. And at the same time, he was trying to over-regulate the decentralized part of crypto, not the centralized part, the decentralized part. And I'm going to try and find a tweet because this kind of, I'm not one to really dive too deeply into conspiracy theories, but there were one or two tweets. Here's the tweet over here where CZ says, "Liquidating our FTT is just post-exit risk management, learning from Neuner. We gave support before, but we won't pretend to make love after divorce. We are not against anyone, but we won't support people who lobby against other industry players behind their back." And so the theory is that Sam Bankman-Fried was working with Washington and specifically with Gary Gensler and a whole lot of others to almost become a monopoly of crypto in the United States. And he was doing this by excluding everyone else. And specifically, if you want to go more into the rumors were that the way that Sam Bankman-Fried positioned this, and this is where this tweet kind of came from. And again, these are rumors. No one can ever, these are theories. But the rumors are that Sam Bankman-Fried was trying to do this and exclude Binance under the guise that Binance were Chinese. And, the whole Chinese, USA. And that is why people believed that CZ got so angry about the type of lobbying. And he says, we won't support people who lobby against other industry players behind their backs. So that's another one of the conspiracy theories. And I mean, these conspiracy theories go on. So here, let me show you some more. Did you know that Alameda's CEO, which is, remember, Sam Bankman-Fried stepped down as CEO of Alameda, and he appointed this lady called Caroline. And her dad is Glenn Ellison at the Department of Head of Economics at MIT. Prior to that, being appointed, prior to getting appointed to the SEC, Gary Gensler was also a professor at MIT. And there are a whole lot of these other crazy facts linking. For example, CEO of Goldman Sachs, David Solomon, met with SBX to help FTX official get regulatory approval. Here's a photo of Alameda's CEO, Caroline Capital's dad, Glenn Ellison, with Gregory Palm. Now, these, again, there's a lot of these going around, and I can't verify how many of them are real, but it does feel like where there's smoke, there's fire. And one thing that I can say is that Twitter has been an amazing place where, usually we hear a lot on Twitter and we want to brush it off and say, where there's smoke, there's fire. But there's been at least 5 times this year where the small accounts on Twitter that broke the stories that everybody brushed off have come back and said, I told you so. And they were right.
Yeah. Again, to be clear, these are just theories. It's just speculation. But it is interesting to bring it up in the discussion as we're seeing this massive fallout from the FTX and Alameda debacle really reverberate throughout the crypto industry. So again, Ron, tell us which players have been exposed to this. Help me understand just how bad the contagion impact is.
Wow. I want to see if I can actually find you a list of the players that have been involved in this and show you how scary this is. So this is just a list of projects that are affected by FTX, and we can't go through each and every one of them, but this is just the amounts that are invested by FTX and the project. It's a 4-page long list. So that's the first thing. There are hundreds of millions of tens of millions of people who had money on FTX, big venture capital funds. In fact, this is a very scary letter from a fund called Multicoin Capital, which was sent to their LPs. Now, Multicoin is one of the biggest funds in crypto. And if you read here, what they say in the letter, they said, unfortunately, we're not able to withdraw the fund's assets and FTX assets, including Bitcoin, Ethereum, USD, are pending withdrawals and represent approximately 15% of the assets of the fund, excluding side pools, and 9% of the total fund, 9.7% of the total fund AUM. talking about billions and billions of dollars. Other big funds which have written off their investments, Sequoia wrote off their investment in FTX.
Yeah.
Huge Contagion. Now, let me give you some more. There is a rumor in the industry, and again, I can't confirm this because I haven't seen papers, but it comes from a pretty reliable source, that BlockFi, the big lender, which was struggling earlier this year, which has tens of millions of dollars,
now suspended withdrawals as of today,
had a loan to FTX collateralized by FTT. The FTT is worth zero and FTX can't repay the loan. I know that Sam Bankman-Fried was trying to really repay the loan and didn't manage. And I think that, I don't want to say that they're going to be a casualty, but it seems that they've suspended withdrawals. Yeah. And the list goes on and on. Paradigm, Genesis, the list goes on and on. Everybody in the industry was affected because Sam Bankman-Fried was so good. Everyone thought he was so good. And you know why he was so good? Because he was taking leverage and he was just gaining momentum. And people said, I want to be part of the success. I'm missing out here. And now we realize that it was all hot air, smoke and mirrors, leverage, and the industry's paying a huge price.
A huge price, but what does this mean in terms of the cryptocurrencies trading themselves? We know Bitcoin took a big hit. It recovered a little bit due to some, for a change, positive news on the macro front with a lower than expected inflation number coming in. But let's go through some of the damage that we've seen to some of the leading coins in the aftermath of this and get your thoughts on how things could develop.
Well, for one, a large chunk of the liquidity of the industry is now gone because it's evaporated, the leverage dried up, which is a huge problem. And we're going to continue to see more of that happening because we're going to realize the extent of the unwinding. People still believe that they have money in a lender, but little they know that in 2 days' time, that lender may actually go insolvent. They don't actually have that money, which means there's less money to invest in our industry. Also, there's no confidence in our industry. So to bring new money into our industry is going to be a nightmare. And so we're facing a terrible meltdown of prices, which is a great opportunity if you believe in the underlying technology. And that's a silver lining here. Like if you really believe in decentralized money and money that is not controlled by governments, then Bitcoin at 16,800 is probably a great bet. And if you really believe in distributed computers and smart contracts and NFTs, well, then Ethereum at 1,200 might be an amazing bet. Yes, it may go down as we continue to see more unwinding, but at some point, the fundamentals are going to take over, and we're going to remember that this technology is actually changing the world. So I think that's some of the implications. I think a lot of money that was going to be invested is now locked up with liquidators for many years.
But under this scenario, is there any kind of ultimate floor, ultimate support level that you think Bitcoin can still maintain?
I didn't think it would go much lower than we are today. And I want to hope that we're not going to go much lower than we are today. And I want to hope that Bitcoin has been very resilient and Ethereum has been very resilient and continue to be. Ethereum, despite all of this, Ethereum is still trading at $1,300. And I want to remind you that before, during the COVID collapse, Ethereum was trading at $80. And it's now still trading at $1,200 or $1,300. Bitcoin, if you take it just before COVID, was trading at $3,000, or just when the COVID collapse happened, was trading at $3,000. It's still trading at 5x that. So we've still had amazing returns in this industry, and we will continue to have amazing returns. But I just think that we need to get this cleanup operation out of the way. There are chains which are being adopted and technologies which are being used, which is really changing the world. And if you look at it, that technology, even after you look at all these collapses, I just want to show you something. Let's just have some fun here, and let's just look at the Bitcoin chart, and we can go back. Let's go back to pre-COVID times and just quickly see what we've done since pre-COVID times. So here is pre-COVID times. And if we take our ruler and we put it over here, we are still on Bitcoin, even in the middle of this mess, 350% up. I want to show you another chart, which is a token called Matic. Matic is a layer 2 Ethereum blockchain. And the reason why I want to show you this is because a lot of development is happening on Matic. And if you look at Matic, this chart is so small here, but if you look at Matic relative to where it was, it's gone up 5,000%, 5,000% anyway, even after all this crash and all this correction. Even Solana, which has been very hard hit, has gone up from $1 to probably sitting at $15 now. So we haven't lost hope in the technology. We just took a setback. And we're still very, very, very confident that this technology is going to do what it's supposed to do. And in a year or 2 years, this storm would have blown over and people are going to be using this technology to do what it's supposed to do. And people are going to talk about this, but the prices are going to forget that it ever happened. And that's where I am now. And so for me, I am accumulating. I'm accumulating quite aggressively at these levels. I'm starting to get to the bottom of my dry powder. But I think if there was a time to be greedy, it's right now when we're seeing the great unwind.
Be greedy when others are fearful. That's some words of advice from Warren Buffett, who I'm pretty sure is not going to be greedy in this market, given his thoughts on Bitcoin and cryptocurrencies. But Ron, look, you don't see Bitcoin going to zero. You don't see this whole deleveraging, unraveling, people losing faith. Throw in the fact that we have these big macroeconomic storms as well. I mean, granted, we had a better than expected inflation figure come in, but the big picture is we're still heading towards a pretty ugly time on the macroeconomy.
Let me show you.
You don't think it's all over?
Let me show you something. So this is a chart over here of Bitcoin addresses users with balances of bigger than 0.01 Bitcoin. So it just shows you like the growth in the adoption of this technology. Does this look like a technology which is not being adopted? In fact, the only way that I can change my conviction in this industry is if the fundamentals and the underlying charts change. And regardless of the prices, this is a technology which is growing exponentially. And if I call up the same chart on Ethereum, I'll do that for you in a second. So here's the chart on Ethereum. And what you can see, let's just quickly go to a bigger chart. Again, this is a technology where the adoption is growing exponentially. Now, markets can deviate from fundamentals for a long time, but ultimately everything comes to equilibrium. And when you have a technology which is growing this fast, with fundamentals and adoption which are happening this fast, you have to see through the price action and the actions of some greedy, highly leveraged, centralized players which made huge mistakes. You got to see below that level, and you got to go back to the fundamentals and say, do I think that this technology will change the world? And for me, the answer is absolutely yes. And therefore, I've got to block out this noise, no matter how noisy it is.
Yeah.
And I've got to keep my eyes focused on the real fundamentals, what's actually under the hood.
Okay, I like the positive spin, and I get that you're seeing some positivity far off on the horizon. But for right now, as you said, we're in the middle of the storm. You don't think we've seen the extent of the ugliness. You think it could still get a heck of a lot worse given where we are right now.
I don't know if it's going to get a heck of a lot worse, but I do think we're going to see some more repercussions. I think it has already got a heck of a lot worse. And I think what's left now is collateral damage. So it's almost like, you remember when we had the COVID pandemic a while in 2020, and
yes, the markets I remember COVID, Ron.
So I think right now we're in the eye of the storm. I think right now we're in the period where we don't know how we're going to come out of this. We're in the period before the government gave us stimulus. We're in the period before they announced how they were going to help us rescue the economy. That's where I think we are right now. Now, the implications of this pandemic will continue to haunt us for a while, but I think that it feels to me, having been a part of multiple market crashes and catastrophes, this feels to me like the capitulation. This feels to me like it's the ultimate capitulation. And for me, traditionally, every time I've looked at a market that's experienced capitulation, my rule is that when it feels the most uncomfortable to buy, that is when you want to be buying. And I remember when lockdowns hit last year, and I was watching news outlets, and they were telling us that we've gone into lockdown, which was completely unprecedented, and people were dying in hospitals, and there's no vaccine and everything else. And I remember we had that feeling where it felt really uncomfortable because all we wanted to do is protect ourselves and protect our wealth. That was the best time to invest. And I think that I'm feeling the same thing here in the crypto market. It feels like chaos. It feels like we don't know how we're going to be bailed out. It feels like we don't know what the repercussions of this virus are. But I think that for me is a signal that we're probably near the bottom.
All right. I'm not so sure I like the metaphor of the government coming in and to the rescue during COVID, because that's what's gotten us into the mess that we're in right now with that unprecedented fiscal and monetary stimulus. But I get your broader point. I get your broader point that at the darkest times, we think that there is no light, and somehow we do come out of it. And it's at those dark times that it's probably the best time to suck it up and take a bold step of action. Ron, you speak to a lot of people. Is that the sentiment that you're feeling, or is there a sense of despair, or is there still that optimism with all the people that you've been chatting to?
I'm glad you asked that, because we're in similar fields in our work. We're both in broadcast, and I'm here in London, as you can see. I'm not in a normal studio, and I came here to a conference called Token 2049. And Token 2049 is a huge conference where there are tons of retail investors, institutional investors in London. I think it was about 5,000 people. And the mood for me was like, wow, what a week. I felt like I'd been through a tumble dryer. I felt like I'd been spun on double speed in a tumble dryer, and I had to go and interview people. And I walked around with a microphone and I said, well, how are you guys feeling about the future of the industry? And I was expecting people to say to me, it's over. People were like, we're positive, we're building. It was incredible to feel. So I think what's happened is a lot of retail and a lot of tourists have been flushed out.
Okay.
But one thing about the crypto industry is, because of the complexity of the technology, the brain power that is required to build technology in this industry is very big. And so I've never seen an industry with so many smart people. And those people are not looking at the price, but they are continuing to build. So as long as their runways haven't been destroyed by this collapse, they are continuing to build, and they're building with a mission of this decentralized economy, decentralized finance, and disintermediating centralized entities and governments and stuff like that. And they continue to build regardless of the storm. They say bear markets are for building, builders continue to build. That's
all right, but
exactly
I'm going to put I like the optimism, but I am going to put you on the spot, Ron, because you have given us price predictions in the past. Is there a floor here that you're willing to call? Is there a floor, an ultimate floor, that you think, you know what, Bitcoin is not going to drop below this level?
I mean, if you I'm not good at price predictions, but if you put me on the floor, I guess the lowest level from a technical point of view that people have been calling is around 12,500 on Bitcoin. Again, I don't look at price floors because I'm looking at this for a long period of time and I believe in the technology, but I'd be very surprised if Bitcoin did go under that.
All right. Well, we'll leave it on the somewhat optimistic note. Ron, thanks for breaking this down for us. I'm sure there'll be more developments by the time we post this video, but we'll check in with you later. Enjoy your time in London, and thank you for joining us, Ron Neuner. Really appreciate it. Co-founder and host of Crypto Banter.
Michelle, thank you so much.
All right. And thank you for watching Kitco. Don't forget to subscribe.